For decades, there was a quiet promise sitting at the heart of British life. One person, one job, one front door. A single wage could buy a home, and the home was truly yours. That was the British dream, and for a very long time, the maths behind it actually worked. A single breadwinner could raise a family, own the walls around them, and sleep at night without a spreadsheet. In 2026, that promise has hit a wall. Not a wall of bad luck, and not a wall of bad choices, but a wall of pure arithmetic. If you are trying to buy a house in this country on your own, you are not just fighting the market, you are fighting the physics of the system itself. So tonight, we are going to run that maths honestly, line by line, until you can see exactly where the wall stands, and why so many people are quietly slamming into it. Let's begin with the fuel in the tank. The median individual salary in the UK today sits at around £35,000. On paper, that sounds like a real income, a grown-up number. But the number on your contract is never the number in your account. Take that £35,000 and let HMRC go to work. First, income tax takes its share, then national insurance takes another slice. And for millions of graduates, a Plan 2 student loan quietly draws off 9% of everything earned above the threshold, month after month, without ever asking. When the dust finally settles, that £35,000 salary leaves you with roughly £2,200 a month. That is your solitary fuel. Everything runs on it. The mortgage, the bills, the food, the travel, the life. All of it has to be powered by that single figure. There is no second income idling quietly in the background. There is no partner's wage to catch the overflow. There is one engine, and that engine is you. Now let's walk into the bank, because this is where the wall first becomes visible. When a lender decides how much they are willing to hand you, they do not start with your dreams or your discipline or how carefully you budget. They start with a multiplier. And in 2026, that multiplier is rigid, 4.5 times your income. 4.5 times £35,000, do that sum, and the bank offers you £157,500. That is the ceiling. That is the absolute most the system will lend a single median earner. No matter how spotless your credit, no matter how many years you have saved. Now hold that figure up against reality. The average house in the UK costs roughly £285,000. Look at those two numbers side by side. £157,500 in one hand, £285,000 in the other. There is a canyon between them, and no amount of clever budgeting closes it. That canyon has a name. We call it the capital gap. It is the distance between what the bank is willing to lend and what the house actually costs. And on a single salary, it is brutal. If the bank stops dead at £157,500 and the home costs £285,000, then you, personally, must find the difference. And that difference is over £120,000. £120,000 in cash sitting in your account before you are even handed a single key. And here is the cruel part. You are expected to save that mountain out of the very same £2,200 a month that is already paying your rent, your travel, and your food. Even if you stripped your life down to the bone and forced a few £100s a month into an ISA or a lifetime ISA, you would still be climbing that mountain for a decade or more, while the house prices at the top of it keep climbing away from you. Saving your way to a single salary deposit isn't merely difficult. In most of this country, it is very nearly impossible. Here is what it actually feels like from the inside. Picture a rowing boat, built for two, but only one seat is filled. You have one oar, and the river is flowing hard against you. A couple with two incomes have both oars in the water. They pull together, and the boat surges forward with real speed. But you have to work twice as hard just to stop the boat drifting backward. Every single month, the current of interest charges is pushing against you, and a huge share of your effort goes not into moving forward, but simply into holding your position against the pull. That is the uphill cycle of buying a loan. You are not lazy. You are not failing. You are simply the only person with an oar in a river that was designed for two. Now, where you stand on the map changes everything, and this is where hope and heartbreak split cleanly apart. Go to the north of England, into parts of the Midlands, up to the northeast. Here, £150,000 still unlocks a front door, a terraced house, a modest semi, a real home that a single median salary can genuinely, honestly reach. In these places, The British dream is bruised, but it is still breathing. Now travel south, into the southeast, into the commuter belt, into the gravity of London, where the average home can cost well over £500,000. Here, that exact same £35,000 salary buys you something strange and painful. It makes you what we call income rich, but housing homeless. You earn a respectable wage. By almost any historic measure, you are doing well. And yet the door stays locked. The dream shimmers on the horizon like a mirage, and with every step you take toward it, it quietly retreats another step away. But let's say you make it. Let's say that somehow you cross the capital gap and the keys are finally in your hand. The story does not end there, because now you face something new, the resilience test. When you own alone, every single fixed cost lands on one set of shoulders: the council tax, the service charge, the mortgage itself. There is nobody beside you to split any of it. And then, on some perfectly ordinary afternoon, the car fails its MOT, or a sudden vet bill lands for £800. For a two-income household, that is an annoyance, a bad week, quickly forgotten. But for you, alone, it is a financial heart attack. There is no safety net person across the kitchen table to absorb half the blow. The entire weight of the hit is yours, and yours only, and it can knock you flat for months. And this is the part that nobody warns you about. On any quiet morning, the direct debit hits. You watch the money leave the account before you have even finished your coffee. And a strange, hollow thought arrives right alongside it. You realize that you are working from Monday straight through to Thursday, every single week, just to pay for a front door you are barely ever home to stand behind. You bought a home in order to live in it. Instead, you work to fund it, and you rarely get to enjoy it. And even that is not the whole picture, because the bank's tidy little sum hides something important. Many of those so-called affordable flats in the southeast are leasehold. That means ground rent. That means a service charge. And those charges can behave exactly like a secondary mortgage, a second monthly bill that the lender often waves away in their basic affordability figures, but one that lands on you, in full, for as long as you own the place. You budgeted carefully for a mortgage. Nobody ever mentioned the shadow mortgage sitting quietly beside it. So, can you afford a mortgage on one salary in the UK in 2026? Here is the honest answer. On the salary alone, for most of this country, the answer is no. The 4.5 times multiplier and the capital gap have seen to that. Owning a home in Britain, entirely alone, now requires more than a wage. It requires a capital injection, help from BOMAD, the bank of mum and dad, an inheritance, a sudden windfall, or years of ferocious, single-minded saving that most lives simply cannot sustain. But before you close this in despair, hear the real lesson underneath all of it. The goal was never the biggest mortgage the bank would grant you. A vast loan resting on a single income is not freedom at all. It is a heavier boat and a stronger current. Real freedom is the margin. It is the room you manage to keep at the end of the month for your actual life, the space to absorb the vet bill, the room to breathe on a quiet morning, the ability to say yes to the things that make a house worth owning in the first place. So chase the margin, not the mortgage, because a smaller home that you can genuinely live in will always beat a larger one that quietly ends up owning you. If you learned something from this video, hit like and subscribe. I'll see you in the next one.